Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to our webinar. First of all, I will take off with today's topic. The headline would be how to start making that trading plan. Firstly, I would like to make a few steps back and see what we spoke about the last time. Last session was a bit of an overview on what exactly you will be expecting from these particular advanced series. Extremely important to remember the rules that we've set the last time. Extremely simple rules that we will be following accordingly each time in our sessions. This would be our risk management program, to plan to trade our own plan, also to let our profits run. We will of course also learn how mistakes can kill any type of trading system. Also, we will have a little bit of moment to remind ourselves how fees and costs actually play a very large role into your return at the end of the month or annual return on your investment. Also, to be a successful trader, what we've learned is that what is working and what is not working, to follow actually the most working system that you will ever be able to trade. Also, the size of our positions, what is the importance of it, as well as the patterns that we're following along the way to recognize market direction, the positions, and what is the correlation between different instruments. And at the end, of course, we will have a look at the whole picture, how we are the most important figure into our trading plan, not only the trading plan itself. So, ladies and gentlemen, before learning about trading plan development, it is extremely important to note the difference between different type of traders. Okay, mostly, or should I say typically, traders fall into one of two broad categories. We're talking about the discretionary trader and system-based traders. Now, what is the discretionary type of trader? This is a bit of a different word that I'm actually using since our last teachings. It falls into a better explanation of what it actually means, and anyone can find pretty much what kind of trader he is by thinking on this particular word and the meaning of it. So, discretionary trader, or the so-called decision-based type of trader, is the person that watches the market and places manual trades in response to a type of information that is available at this time, at this moment. And of course, the second broad category of traders is the system-based traders, or the so-called rules-based traders, who of course often use some level of trade automation to implement an objective set of trading rules. Now, what does that mean? It means that it is also often viewed as easier to jump into trading as a discretionary type of trader. That's where most type of traders start. Okay, I cannot easily just disregard the type of traders that are using this particular way of trading. It's very easy to explain why. It's because the majority of traders are discretionary type of traders. They rely on fundamental data at a given time of day to point market direction. It's not a mistake. I'm not saying that, of course. What I'm saying is that relying on a combination of knowledge and intuition to find high probability trading opportunities is somehow riskier than being a systemized type of trader. So even if a discretionary trader uses a specific trading plan, he or she still decides whether or not to actually place each trade. So that's mostly based on intuition to find market direction, position sizing, so on and so forth. For example, I might say that a discretionary type of trader and his or her personal charting technique may show that all criteria have been met for, let's say, a long position, but they may also skip that particular trade if the market have been too choppy and, of course, too volatile in that particular session. So this is mostly from a psychological standing point. However, the systemized type of trader, on the other hand, follows the trading system and its logic by the book, exactly. Because system trading is based on an absolute set of rules, this type of trading, ladies and gentlemen, is well suited for partial or full trade automation. For example, let's take an example, a system that can be coded, okay, using your trading platform or proprietary language, should I say. And once the strategy is turned on, the computer handles all trading activity, including identifying trades, other entries, management, and of course exits. The type of systemized trader is also the robot trading. However, in most cases, no matter how good the robotic system works, it's much more recommended, much better with regards to the risk side of the trading to implement those trades by sitting in front of your computer and observing all that is happening. So do not let your robot go do your work instead of you and just go outside somewhere without any kind of information on what this particular system is doing, because there is a time when it will fail, and it will fail majorly. What we need to do is to be always on top of that situation. So it doesn't matter if you are executing those trades by your system or you let the robot go, do the job for you. Always watch the market and the trades that are executed. From a financial standpoint of view, is much safer. Let's also have another look at the discretionary type of traders, that they particularly do not always operate under a specific set of trading rules as the system traders do. System traders require a comprehensive trading plan that takes the guesswork, should we say, out of the trading and provides consistency over time. In today's session, ladies and gentlemen, we will discuss how to develop a trading plan, which of course will be just the beginning of the whole picture. So today we will have a look at different sections of the whole system to develop this particular trading plan. The first one will be market and its direction, what will be traded. So let's say, for example, that today's traders are not limited only to stocks as it's been in over the past century, should I say. You have wide range of selections of instruments from which to choose. including commodities, currencies, indices, if you wish. In order to trading to be successful, however, any chosen instrument must trade under very good liquidity and volatility. Now, today we will have a look at the liquidity type of view. I've left the volatility as a separate particular section of these advanced series for a very simple reason. We'll have a lot to talk about it, especially on what moves the market and at what particular times of the day you can expect large volumes on the market, increased volatility, and how you can use that to amplify the results, should I say, the results of your trading plan. It's an integral part of any trading plan. Liquidity, of course, describes the ability to execute orders of any size very quickly and efficiently without causing a significant change in price. In simple terms, liquidity refers to the case with which any kind of contract, for example, can be bought and sold quickly and efficiently. Now, this particular thing, it very much depends on the broker that you're working with. This is nothing that is actually in your hands as per, position executioning, should I say. Besides the fact that you should choose the perfect broker with large liquidity, quick executions. We personally have a variety of different liquidity providers, so the trades are executed instantly, and of course in times of volatile market you can also set your MetaTrader 4 platform to execute trades in a different manner. This is the so-called type of slippage if it occurs at some point of view, at some point. You know that sometimes when the market is extremely volatile, it's a bit difficult to execute a position at the price that you actually click, because the time that you click on the button, the price can change with a few milliseconds, and basically you won't even see it flash on your screen, but the price will be executed a bit differently with a few pips difference than you actually clicked. So this is not a default to you that you are clicking too slow, should I say, or to the brokerage firm that you're trading with and the executions with the liquidity, but it's mostly because of the market. It's just moving too fast on large volumes, especially on large announcements, let's say FOMC meetings, so on and so forth. You know that the market can be extremely choppy and volatile at these times. So this is something that you can set your trading platform to work for you. Basically, you can limit the slippage to a few pips to some tens of pips, if you wish, on a slippage. So basically, if the price changes with the given set and input that you've made, the position will not be executed, and you will have to try to open a position once more on your desirable price. Now, I am fully aware that for some traders just a few pips wouldn't matter much, because should we say their positions are quite relatively smaller than others, but for other traders that trade on large positions with huge balance in their accounts, I would say every pip matters, because every pip brings additional hundreds of thousands of dollars on a profit or a loss. So it definitely matters when we're actually making our perfect trading plan to work for us. Markets, of course, with good volatility tend to trade with very tight bid and ask spreads, such as our spreads in the firm. They're extremely tight, floating, of course, but extremely tight in most of the time, with enough market depth, of course, to quickly fill orders. And that, of course, depends on the liquidity providers that are accepting those orders. And of course, the liquidity is important to traders because it helps ensure the orders will be filled with minimum slippage, should I say, or filled without substantially affecting the price. So all of this is important. It should not be overlooked. To take our trading plan on, let's say, on a airplane view, to look at it from the top, where we should see all the pieces fit together, we should start with giving a few examples of what a trading plan exactly is. This is a complete set of rules that covers every aspect of your trading life. Now, as an example, many experts may refer to the need to have an edge which will tip the balance of probabilities of success in your favor. In itself, ladies and gentlemen, a plan is not an edge, or, you know, if you want to put it in brackets, edge meaning the tip of the iceberg, your gut telling you all the time that you're right and you're making the right decisions. But trading is not gambling, as most of you might know. For some, of course, this could be something to have fun with if you have, you know, millions to spare. But for those that are taking this business seriously, you will know that you are the ultimate weapon in the market in all of the conditions. So as we mentioned, that the plan itself is not an edge, but over the time, the trader with a plan will fare a lot better than the trader without one. So you don't really go into the woods without taking a match or a blanket. So you have to be prepared for everything. Every piece of information is a good arsenal to making the right decision. Strict following your own rules will prevent you from making future mistakes, those that you've been making before. Many amateurs, ladies and gentlemen, many amateur traders do not have any sort of trading, a plan, should I say, to trade by. So you need that plan to make everything like it should be every day. Also, those type of traders enter the markets with some kind of disrespect, should I say, and to their risk that brings enormous loss, for example. Of course, we also have to say that comprehensive risk and money management strategies lie at the heart of all good trading plans. Traders with a plan have the ability to monitor their performance. As we mentioned the last time, what did we mention? We mentioned that every good trader or a professional trader records his own performance, like all the positions that you've made, all losses that you sustained, all profits that you've made. All of that, you need to know why. Why did you make those profits? What made you go into that position that made you those profits? Why did you lose that money, for example? And what went wrong when you made those decisions? All of this by recording it in the future, you will see how you will start smoothing out all of these mistakes that you've made in the past, and you will try not to make them in the future, because they will be right with you in your record. You will know that, for example, let's say before major announcements, a few minutes, you do not enter a trade, because you have no idea at what direction the market will go after this particular announcement, or any kind of fundamental data, whatever it is. If it's expected with high volatility, you should always wait for the announcement and take the decision afterwards, because it's very normal the market to price in the direction with expectations, as we mentioned before, but it's very easy to make a mistake by following this and then hit rock bottom when the market reverses the other way on unexpected announcement, because this happens every day. For example, today we saw the unemployment rate for UK rising the first time in 2 years. The British pound versus the dollar didn't make much of a move. It actually hovered around our entries of long position yesterday. But for those that were receiving our trading recommendations as some kind of trading signals that we're sending, they've already made that profit yesterday, and today they wouldn't regret it even for a single reason, because they already made the profit they needed. And that is actually because of this particular plan that I am following, and that I'm making those signals from a fundamental and technical standpoint for you to have absolutely free. So getting back to the our trading plan, so traders that have that particular trading plan, they can evaluate their progress continuously, day by day, in a way that you understand it better for yourself. So don't make any kind of let's say don't use terms that you can't really understand, or at least try to understand when you make those records. And if you don't understand something the way you see it, just make it in a comprehensive way, so the next time you look at it, you will know exactly what it is. Also, the trading plan enables those particular traders to trade without emotion and with minimum stress, which is extremely important in any kind of trading environment, simply because if you want to be in this particular business and if you want to profit from it, stress will be stress and emotions in combination. They will be they will just take the best of you. They will hit you down to the ground, and eventually traders tend to lose a lot of money at these kind of moments. Yes, I'm not saying that it's not possible for a professional trader to, let's say, get emotional at some point or stressed, but then professional traders know that in these kind of moments they should take it easy, stay away from the market for a few days or even weeks or months if it's necessary, only to fight this particular emotion and stress and come back to the market healthy to do your work. The traders without a plan, let's have a look at those particular individuals which in most cases are not able to do this. All of that we've mentioned so far, and their trading tends to rely upon gut feeling, as we mentioned earlier, hunches, tips, so on and so forth. Trading for them is a nail-biting, emotional roller coaster ride for stress. That, of course, inevitably results in financial loss. Obviously, from what we know so far, a plan does not guarantee success. This is important for you to understand. That would be too simple if only a trading plan can make you cash. However, a good plan adheres to strictly, and of course for strict trading, and of course to minimize losses, which is very important to for you to be able to stay in the game a lot longer than traders who do not have a trading plan. So you see, surviving on the market long enough for you to make that profit that you're looking for. It doesn't matter if it's, let's say, your goal is to reach $1,000 because you want to buy something, or just because you need that cash, or you need to make $100,000, or you want to make $100 million. It really doesn't matter. Everyone's objective is different. So for me personally, I will be trading for another 10 years, and it will be time for me to retire, because if when I'm following my trading plan strictly, everything goes as normal. It's work as you go to the office every day. So at that time, I will be about 45, 46. And I can pretty much do everything else besides trading. So you see, this is not only a profession, a pleasure to do business or to make money on the market, but it's also something to think for in the future, because you have kids to raise, because you have family to take care of, and because you want to retire early and just grab your fishing boat and go out in the ocean, or do whatever you want to do with the money that you've already earned. So following those objectives strictly with your trading plan will get you closer and closer to your final goal. Today's session is pretty much based on the first steps of making a trading plan. What you need to understand is, what is the trading plan? Why do you do it? Why do you need it? So why do you need it, and who does need a trading plan is the next question that we will be working on. Well, unless you've been a consistently profitable trader over a sufficient length of time, for example, to ensure a number of overcome different market conditions, then you personally need a trading plan. If you have achieved all of what we've spoken so far, then this particular session may not tell you anything you don't already know, because there is no successful trader anywhere in the world without a good trading plan. If someone is trading only by gut, this will bring him a few good years of trading and no more, because his nerves, the stress that it's getting over him, it will wear him off like an old tire and just will collapse at one day. This is what I'm seeing every day on every different trader, because they don't have a simple trading plan to follow. However, it may still prove useful as a refresher, of course, or indeed to open your eyes to new aspects of trading that can improve your profitability. So you see, it's not only for basic type of traders. It's not only for for new traders that come to the market. It's also for those that have struggled for so many years to do something with their trading account, but they haven't really made much of progress. Some people have described to me personally, sometimes when I lead my one-on-one trading sessions, when we speak about trading plan, as some kind of a roadmap, or it's like a GPS guiding you in the marketplace, because it is quite literally put the road that will take you from where you are right now to where you want to be in the future, which of course most traders are consistently profitable by following their own trading plan. Now, in our sessions, ladies and gentlemen, when we're speaking about how to make a trading plan, I will give you a few, let's say, like templates, all right? But they're mostly going to be like a guideline. I can't really make a specific individual, to make a trading plan for a specific individual. I might be able to, but then, this takes a lot of time to find out what kind of person this guy is, or girl. So it will be much more easier for me to give you exactly what you need to make that plan from A to Z, what you need to ask yourself every time when you're making that trading plan, and how to evaluate yourself of what kind of trader you actually are. Are you from the, as we spoke earlier, from the systematic-based traders, or you're a discretionary type of traders? Basically, all discretionary traders are looking to be systematic traders, because this is the way it will work. Well, let's see at the end of our session what a trading plan actually does. A trading plan will make the act of trading much more simpler than it would be if you trade without a trading plan. It will limit your opportunity to make bad trades. This is why you need that trading plan, because nobody complains about the good trades, all right? I've never heard about someone telling me, hey, I really made a good trade, like I made a couple of $1,000 and I'm really mad because I didn't lost them. Nobody said that. Everyone is feeling bad about the bad trades. And this is why you need a trading plan, to stop losing money and survive long enough for you to keep making those profitable trades. But also, I will keep mentioning throughout the whole series, you have to record your experience, basically. All of the trades that you've made, why you made it, why you make that mistake, why you made that profit. This is what you need. And align them in a graph or a table of some sort, where it's going to be bad and good. It is like the most simple thing that you can do. And line up the reasons for good trades and the reasons for bad trades. As we mentioned, trading plan is to limit your opportunity to make bad trades, and of course it will prevent many psychological issues from taking root, because in our earlier teachings, ladies and gentlemen, some of you are here from the beginning, which I deeply appreciate. You remember when we spoke about psychology of trading, we actually took it 2 months because it was a very long topic, extremely important. And it was very interesting for a lot of people that actually found why they were making mistakes, because they found themselves as traders on those topics. So helping us to achieve all of these things that we spoke so far is why we need the trading plan. And what it does is that, as we mentioned, it acts as a roadmap, but also locates your position as well. where you are at this moment, where you are on the route of achieving your goals, your final goal, because everyone has a dream. He wants to fulfill that dream. And that dream is his final goal. So if you want to reach it, you need that roadmap that will lead you there. Most importantly, if your trading is going very badly, you will know that it's down to one or two possibilities. Either something in the plan is not working or you're not adhering to the plan. So those are two possibilities. Your trading plan is not for you. You're using probably somebody else's trading plan, found somebody somewhere on the web, or a friend told you that the trading plan that he's using is really good, but at the end your trading is going really bad. So there are two possibilities. You're not obeying your own trading plan, or you're using one which is not meant for you. If the plan is no good, and let's start from there, it is what you can do is to go back and start testing it. So when you start testing this particular plan, you will need just a very small amount of money, okay, within your trading accounts. Then the fault is likely to be found in the place of those two options that we mentioned earlier. But what if you are losing money while trading without a plan? It is virtually, ladies and gentlemen, impossible to distinguish what you're doing right now and what you're doing wrong. So you have no way to evaluate your results. Therefore, the likelihood of being able to diagnose the fault and correct all mistakes that you've made, it is very small, and it could take you virtually and literally forever. A trading plan, as I mentioned, is your personal GPS device to locate your position, and if you have made any type of wrong turn, it provides the means to identify where you went wrong and how to get back on track. So you see, everyone makes mistakes. It's only natural for humans to make mistakes, especially when it involves the financial side of life. You know, everyone has earned money, spent money. Somewhere you spent it well, somewhere you actually just threw it out of the window. That's why you need that trading plan. When you make a mistake, because I'm not saying if, it's going to be when, you need to go back a few steps and find yourself back where you should go on the right path to success. Also, as we mentioned, you are able to use that trading plan to evaluate constantly your particular results and, more importantly, your discipline in a manner, of course, that is objective and, again, comprehensive. All of this needs to be very simple for you to understand. This is extremely difficult to do if you do not have a trading plan. So, in general, a trading plan should take away much of the decision-making in the head, and of course in the particular heat of the moment. So there will be no emotional issues that might become powerful when real money is on the line, and is very likely not to force you into making irrational decisions, which is extremely easy for people like the the ones that we mentioned earlier, the discretionary type of traders. It's very easy for them to make a mistake because they rely on data in real time when you receive it. Of course, I'm not saying that's a bad thing. It's very stressful because you're always trading on the high volatility wave of the market. So with the correct trading plan, ladies and gentlemen, your every action should be spelled out so that in the heat of the moment, as we mentioned, you do not have to make any decisions. You just follow what the trading plan says in front of you. All right. I hope that you guys are now focused on what I've just said to you the whole 45 minutes as we are into the session. In a summary of what the key benefits are when using a trading plan are quite a lot. So let me fill you in with just a few. It's just a state of mind when you're trading. You're relaxed, stress-free trading that is absolutely simpler with a plan, and it's very difficult to achieve without one. A plan helps to prevent many psychological issues to take root, is what we mentioned. Another one, what we mentioned as a short notice, a plan that is adhered to strictly will reduce the number of bad trades. Extremely important to remember. A plan will help prevent irrational decisions in the heat of the moment. A plan enables you to control the only thing you can control, yourself. Professional traders, ladies and gentlemen, are highly disciplined. That's why you need to have that plan, to be disciplined like a professional trader. A plan will give you a large measure of discipline into your trading. So, as we mentioned in the earlier minutes of today's session, it's not a gambling. Gamblers, for example, tend to lack both discipline and a plan. So I'm not going to give you any more examples why you need that particular plan. What I will do is give you some time to think about it until our next session. It's this Friday. We will speak about volatility, and throughout the sessions, I know that it's pieces and bits of information, but please remember, the last two sessions we will connect all the dots, and you will see how the structure of this trading plan works and what you have to do from the beginning of the trading day until the last minute of your trading day. So, thank you very much for joining us in today's session. Please join us in our next session, which will be this Friday. We will, at the same time, at 12 GMT, we will talk about volatility. It's an integral part of any trading. So I will see you then. If you have any questions, you know how to get in touch with us. Either send us an email at webinar@gdmfx.com. We're constantly monitoring this particular address due to the majority of traders that are actually asking questions, or you can get right away in touch with us over the phone throughout our support departments and get in touch with me or any other of my colleagues. That's all for today. Thank you very much for joining us. I'll see you next time. Bye-bye.